everyone, welcome to my YouTube channel. My name is André Cardoso. I welcome you here. Thank you for following, for those who are following, and for those who are here for the first time. I hope somehow you take some information, some valid information from these contents. So I'm here to share with you some of the patterns that I search for inside of the market. So those who are familiar with advanced pattern formations, you already know I'm talking about harmonic patterns. Not only, I don't trade only harmonic patterns, I also search for the most basic and simple, not so advanced, let's say, advanced patterns inside the market, like as double tops and double bottoms and heads and shoulders and everything that is tradable and which allow us to engage the market with a decent risk-reward approach. So we never enter the market to lose more than what we expect to win in a trade. So that said, we can manage, we can adjust our levels based on the pattern that we are trading. So if you are trading a double bottom or a double top, you already know that you need to respect the highs or the bottom of the structure once you engage the trade. That will depend where you engage the trade. If you trade the breakout of the next zone, if you trade the retest of the next zone, heads and shoulders formation is the same. If you trade the breakout of the neck, if you want to try to identify the formation of the right shoulder to create an attempt with a better or a friendly risk-reward approach, always respecting the price structure. So we already know in advance where those patterns will fail. And that is crucial because that allows us to identify our invalidation level synced with our targets, default targets for those patterns, the default projections for those patterns, and that allows us to develop and to create a risk strategy to repeat on a daily basis. So if you want to trade the markets for living, and this is my case, and a lot of people that I'm used to deal with, they live from what the market produces to them. So they need to be extremely disciplined in order to identify those patterns, to identify their limits, and they need a risk strategy to trade that technical approach. That said, for today I want to share with you some of those events. Please note this is not an advice to engage the market, so this is an advice to learn how the market behaves and what type of patterns you want to trade inside the market, what makes you comfortable inside the market. So that said, let's jump into those charts for those who are here for the first time to get a clear idea of what I mean with identifying those patterns. So this is pound versus Aussie. I was expecting the formation of this Gartley pattern at 127 extension. It's also an extension at the 224 extension, which guide me into another pattern, and this is let's call it an internal behavior inside all these structure, and it's a shark pattern. There are a lot of patterns inside the market. This is the shark pattern at 224 extension. So I was expecting somehow that level to produce this fall. So the market has rejected that level, that specific price level at least. Once I shared the possibility for the price to create a pattern, the price started to fall, rejecting the idea of printing the pattern just a few points, a couple of points above the recent price at that time. So the market has already synced. So let's say the price behavior expectation based on the Fibonacci ratios has already moved in that direction, so the expectation was already filled, but nothing assures us, and because we have also, since I have no divergence, no bearish divergence between those highs, I will not be admired to see a bounce and eventually this new high on price, eventually printing that so expected bearish divergence. So what I mean is the price will respect this previous structural resistance now as a support, will bounce, printing a new high, eventually retesting those weekly and monthly resistance above. But the idea is to print a new high with the RSI rejecting that idea. So I need the RSI, let's say, printing a double top kind of, and the price printing new highs. That will offer me, or that will start to show us some bearish signs, bearish divergence, which we may take advantage, or we can try to take advantage from those signals. So the pattern will complete, bearish divergence, stops always above this previous structure high, so we need to set our stops above this structure, and then we try to follow the 38% retracement expected behavior from there. Obviously, you don't want to engage the market to lose more than what you expect to win, so this is your trade, this is your, when I say your, please put some comments there, but this is our trade for 2.88% below our entry point, so this is our default expectation for that pattern. Expectation is not granted, and that said, if this is an expectation, it doesn't make sense to enter the market to lose more than what you expect to win. First of all, it's a pattern, it's a very reliable pattern if printed, but even though we never know if the pattern will be respected today, eventually tomorrow the pattern will work, eventually today the pattern will not work, so we never know about that. What we know is where the pattern will invalidate. Okay, we know if the price starts to trade above these structure highs, will invalidate. We have our entry level, and we have our default targets for the pattern, and we have structure. We have a previous daily support, which may act as support again at 50% retracement. So we have three default, let's say three minimum expectations if the pattern ends up being printed. So at this point we are trading inside an ascending channel or ascending structure, and that said, and based on the lack of bearish divergence, I will not be admired or surprised to see a new high and then a fall respecting the pattern. The same way I will not be surprised with the fail of the pattern with pound pushing higher. Okay, that will not surprise me. Actually, based on the most recent events related to Brexit and all those advanced or non-advanced resolution of Brexit, eventually it will put the price a few points higher and breaking these daily resistance and weekly resistance if the fundamental news events actually they can help the pound to trade higher if there's developments related to Brexit. At this point, nothing is telling me that will happen, but those events may change. For now, there's a non-resolution for Brexit. There's a lot of confusion related to those events, and at this point, based on the pattern that we have, and that's what we need to get focused, not on the news, because the news is all, when we check the news is already past, and it belongs to the past, and well, there's nothing to do related to that. We need to react to those events, but few moments later. So we don't trade based on external events that will create extremely extreme volatility, and most of the times inside those huge periods of volatility, with spread, which variable spreads, those who are trading with variable spreads will not be able to engage the market without suffering a little bit. So those periods of high volatility, I prefer to stay focused on the patterns the market is offering me, and I, even though I will try to take advantage from them, I don't care about what's happening outside the price action. So I respect. I'm 100% technical trader. I don't turn on my TV for long periods of time to check the news or to check those external events. So that said, nothing assures the pattern will work, so I will not be surprised to see a new high, the formation of the pattern, and then targets at 38% retracement, the same way that if something changes related to Brexit and forcing the pound to gain some strength from here, I will not be surprised to see cable trading higher. That said, let's move on. This is just one small approach on cable versus Aussie. Euro versus New Zealand. I have a few pairs that I want to share with you. This was, and it is Euro versus New Zealand. This was the bearish crab pattern at 168 extension above. So as you can see here, the market has, during those news events, the market has spiked up. This was during 3 weeks ago, I believe. It was overnight sessions, and it was something related to Apple report that moves equities, and that there was also New Zealand, I believe, New Zealand reports, states reports that actually it has forced the price to let, as I said before, extremely periods of those news events will create those huge spikes and those huge volatility behaviors, or higher volatility price momentums. No, so at this point we have the bearish crab pattern above at 168 extension, as I mentioned before. The price has sunk, and then it has created this. Actually, this is the crab pattern at 161 exactly, and this is the shark pattern at 161.8 at confluence with the golden ratio. This is the 618 from the structure below. So from the lows, let me try to show you. So this is the golden ratio from these lows, from the weekly support to the weekly resistance. So this is a 4 hours time frame chart. The market has printed this shark pattern at 168 extension inside this not a parallel channel but a wedge. This was a wedge. We need to correct this structure because it's no longer a parallel, but the market has printed this wedge, and as soon as the market violates this structure, it has started to bounce, as you can see here. So if you connect those lows and those highs, we will see here a wedge forming, and as soon as the market violates this structure, it has started to rise to go up from there. Synced with the shark pattern, so it was a great momentum. At least we are trading the default expectation or the minimum expectations. At this point, we have also hidden divergence between those two bottoms, suggesting more bullish trend continuation. That's what the market is trying to do. It's bouncing now from the previous daily support. So retesting those highs or those higher highs a few points above will not. It's a minimum expectation for the bullish hidden divergence. Retest the previous structure highs or the most recent structure highs. We have the resistance, the most recent 4 hours resistance at that time. This was this week here, so this level also needs to be adjusted to these highs. We have now the 4 hours resistance there. We have also the 4 hours resistance below, and we have the previous daily support adjusted now at the bottom. That said, bullish hidden divergence suggesting more upside momentum. Breaking the 4 hours resistance will reach the default target for the shark at 50% retracement, which will also form and give sequence to a natural 5-0 pattern. So this is the shark pattern, which usually, if the pattern starts to trade the 50% retracement and starts to reject to trade above it, so I need the price to actually to touch the 50% retracement, and as soon as the market starts to fall, but well, it should provide us a bearish momentum, a bearish relief. We never know if the price will retest the lows or keep trading lower, but the shark pattern at 50% retracement, default target for the pattern, will give sequence to the 5-0 pattern. This should provide us some bearish momentum. Note that if the price respects this structure here, this should be reinforced or maybe reinforced later. Okay, let me delete this wedge here just to not confuse. So what I mean is the shark pattern at 1618 extension, it has traded a few points below, so we need to adjust our targets to this bottom. So this Fibonacci retracement is now adjusted to this bottom, so we keep expecting the default 50% retracement since the price is rejecting to trade below the 1618 extension. So let's say the pattern is working, because we need to provide some room below the pattern if necessary, so we need to set our stops accordingly. And if we survive this trade, if you manage the trade in order to keep your stops below this structure when you enter the trade, we keep expecting the market to trade the 50% retracement from all these structures. So I still believe there's room for that. We have now the price printing these bullish hidden divergence, suggesting more upside momentum. 200 moving average. This is a 4 hours time frame chart. So, but we have the 200 moving average also pointing down, pointing up. I'm sorry, and again breaking. This is a nice correction from the tops. We have a minimum, at least a minimum of three waves structure, corrective structure, and that said, breaking above this channel information will increase probabilities at least to retest the daily resistance above, and obviously any type of consolidation above this daily resistance can forge a new bullish momentum, trading even higher, eventually retesting the previous resistance above, so those highs. But it's too soon to predict, to forecast. It's completely nonsense to start to project the prices above. We can try to identify patterns above, but I need the price violating the daily resistance first. We have some signs here, because well, we have these two bottoms. Let me delete those lines to show you what I mean. We have those two bottoms, and I can use a default projection above based on those conditions, based on the Fibonacci ratios between those lows. What I mean is, by default, we search for an extension from the previous swing to the 127 extension. So let's assume this is our first wave, and we search for the price extending at 127 extension. So the market has failed to achieve that level. When that happens, I will face it as a potential false breakout. For that, I will use the 113 extension. If I see the price rejecting, and this is the case, we see the price trading below the 113 extension, but rejecting to trade below and closing above and bouncing from there, the price has bounced from that specific Fibonacci ratio. And that said, as soon as the market respects this level, and as soon as the market, if the market respects this level, and as soon as the market violates this daily resistance, we can start to project patterns above. Obviously, I'm talking about one eventual bearish shark pattern, which will put the price between the 168 extension and the 224 extension. And we can use this like this. So the 168 extension will respect the previous structure highs, the weekly resistance, and the 224 extension will trade above it, will break this structure, which may force later, if completed, obviously, a retest of that structure. What I mean, we are talking about one very remote for now, or very an eventual shark pattern between all these structures. So the first level, the 168 extension, if the price breaks this structure above, and if as soon as the price violates this daily resistance, without breaking, without violating these previous lows. So what I mean, I can see the price, and the price will not go directly there. So the market will enter into periods of consolidation. It will rally. Eventually, it will trade even lower from there, and then will reach those patterns. Okay, what I mean is we can see the market trading sideways before completing those patterns. What I mean, even at 168 extension or even at 224 extension, we can see the price entering into a consolidation period above the 161 extension, something like a sideways process here, and then the market extends to the 224 extension, something like that. This is just an example, okay? It's too soon to predict. It makes no sense to predict the pattern above, unless and only if the price violates and breaks these daily resistance. As soon as the market violates that level, we can start to project those patterns above. Until there, it makes no sense. But it can happen based on the Fibonacci ratios. So as I said before, we may call these a false breakout. Eventually, we need the price to start to trade higher. But if the price starts to trade higher, we can face this and we can consider this as a false breakout. And a false breakout usually is followed by an impulsive momentum. An impulsive momentum should also break the structure, the consolidation process. So the sideways momentum should be broken. So with an impulsive momentum, if the price violates this structure with an impulsive momentum, breaking the daily resistance, then we should search for that impulse that will finish between the 161 and the 224. That will depend the market movers once we start to approach those levels, and we need to check the market conditions once the price approaches those levels. So this is my view for Euro versus New Zealand. Nothing specific for now. We have also one eventual inverted heads and shoulders under formation at this point. So we can see this as one eventual, no, eventually not there, eventually this is the next zone here. But one eventual inverted heads and shoulders. So what I mean is we have our left shoulder, we have the neck, we have the head, the neck again reinforced, the right shoulder, and if that happens, the default projection for Euro versus New Zealand is something around, let's project this above the neck zone. Let's imagine if the price violates the neck at this point, that will put the price retesting this descending channel. The default projection for one eventual, if we can consider this as an inverted heads and shoulders, the default projection and the breakout projection above the neck from the recent location or from the recent price level, that will put the price retesting not only the descending channel structure, the trend line as potential resistance, but also the 200 moving average approaching from above. So let's say there's some signs for that to happen, that to develop at this point. Let's wait and see. Let's forget about those sharks above. Until there, we have a lot of things to think between those support and resistance levels. Euro versus Aussie, what we have here. Okay, this is moving in a sideways process. This is a corrective structure also. I was expecting the violation of this channel resistance trend line above to print that shark pattern at 224 extension. Note that we are trading the shark at 1618 extension, so the market has rejected the 1618 extension. It has produced the expected behavior. It has produced also it has given sequence to the 5-0 pattern. These red lines, the 5-0 pattern should produce us or offer us a bullish momentum, retesting the highs as a minimum expectation. Actually, it has respected the channel structure, the resistance trend line, connecting those previous highs, and 200 moving average again rejected to trade above, and it has started to fall again from there. So I was expecting the formation of this shark, and let's check. And yes, we have some signs again. We have some signs of bullish divergence. So we have new lows on RSI, and the price is, or at least a double bottom, if you want to consider this as a double bottom. And we have the price printing, or at least rejecting to print for now, new lows. So what I mean is, we have the price rejecting to follow the RSI, the relative strength index, and when that happens, bullish hidden divergence suggesting more bullish momentum from here. So what I mean is, eventually the market has finished this correction, and eventually will bounce from here, retesting the highs, and will finally break this structure resistance. Obviously, breaking below the previous 4-hour support will increase probabilities, at least again, to retest the lows, to retest the support trend line. Breaking above will give sequence to the pattern at 224 extension, but attention, because if the market fails to violate this structure support, and if the market starts to trade even higher, that can print us the bearish shark pattern, the bearish cipher pattern at 163.88. So the 78% retracement, if the market respects this previous support level, bouncing from here, breaking this resistance and trades higher, this will print the cipher pattern above. Do not ignore those levels for the next shark pattern at 224 extension, retesting the channel before a new momentum above, or upside momentum. It's also a possibility. So find resistance above this structure channel, trend line resistance. Find the resistance above, turn this resistance trend line as a support, retest this trend line as a support, and then a bounce again to form the cipher pattern above, or eventually ignoring the shark pattern at 224 extension and going directly to those levels. So note that the shark at 224 extension needs to respect these highs. this previous structure resistance, which is also previous support level. Okay, so there's support, there's resistance, and there is the pattern completion point. So for that pattern to work, the price needs to respect this structure. So if you want to engage the market, or if we want to engage the market on those conditions, we need to set our stops above this structure, always considering the possibility for the market to trade higher. And that said, when we look into these setups, eventually trading the shark from here, unless you have unless you are extremely confident, or unless you have a lot of conditions telling you, or a lot of indications telling you this is the right place to short the market, this is not, in fact, in my opinion, the best risk-reward approach that you can search inside the market. There are a lot of opportunities to trade. I prefer to wait for another one, or eventually the cipher pattern above, which stops positioned above this weekly resistance. It will offer us for sure, or eventually, a better or a friendly risk-reward approach. So I still, this is a bearish momentum, so there's still the possibility for this channel to extend and to keep trading sideways, and based on that, trade above or trade below it. During that process, unless you have a specific pattern to trade inside this momentum, which I don't at this point, we should wait for the breakout of the structure. Euro versus cable, or euro versus pound. Also in a zone, not so much at this point, because the market has already violated the pattern itself, so it's no longer the default BAT pattern, but we are trading, let's say we are trading between the default BAT pattern completion point at 88% retracement and the 113 extension for the alternate BAT pattern. So let's say every time you engage the BAT pattern, you need to consider the possibility to form the alternate BAT pattern at 113 extension. So if you enter the market, and let's measure this again, you enter the market at 88% retracement, 88% retracement entry level with default targets at 144, 145 points. This is my default target for the pattern initially. So if we use a one-to-one risk reward, that will put the price 145 points below, considering the alt BAT pattern at 113 extension. If you use a one-to-one risk reward approach from here, you will survive. If you try to minimize, as I tend to do, if you try to minimize your losses into a 1-2 risk reward approach, you lose $1 to win 2. Eventually, I was kicked out for sure from these markets. We are talking about 75 points or 80 points below my entry point, my entry level, and the market has decided to kick me out. Always consider the possibility for the market to extend below those lows, hunting those stops below to fill the alternate BAT pattern, or something in between the 88% retracement and the 113 extension. So those are the levels. The market has decided to bounce, respecting the weekly resistance, monthly support, actually the monthly support, the weekly support. The monthly support is also positioned below, so this is a support printed last April 17th, so last year, and the market is now respecting that level with these nice bullish candles there. So at this point we need to adjust our Fibonacci levels to the most recent lows, and from there we can see the market is already trading not the 38% retracement. I thought this was a 38% retracement. It's not. This is the first level. Let's try to search for the default 38% retracement as a minimum expectation for that pattern. So at this point, as you can see, the and for those who are still holding these positions from here, or for those who are buying these markets, I believe there will be some pressure at 38% retracement. So if you are buying the markets, attention to those levels may produce some bearish momentum there, some bearish pressure at least. 200 moving average above previous support, 50% retracement. Well, that's what it is. At least for now, we have nothing more to say on for euro versus pound on this specific time frame. So actually, this is kind of a 12 hours time frame chart. So let's say we keep following this BAT pattern, or something between the default BAT pattern and the alt BAT pattern at 113 extension. So any between that range, the market should produce something, should produce a bounce from there. So we have also this structure, descending structure. The market has already violated that structure, which increases the probability to trade higher as soon as the market violates that structure. The market has produced this bullish momentum. We have previous daily supports here, these candles. This is the previous daily support, because the new daily support is obviously is positioned below. Actually, let me check. This is euro versus cable. And we have daily support positioned at exactly below at those buttons. So that said, daily support below, above the monthly support, and 4 hours resistance is no longer there, it's here. The 4 hour support is here. Weekly support, we keep the idea to keep the weekly support below middle, no, top, center. Okay, weekly support, monthly and daily supports below. So we're still respecting the monthly support printed last April, as I showed you before. So we have the most recent daily support and weekly supports respecting that level, which is always interesting to see. And we have now a new resistance above, the most recent one, the 4 hours resistance, fractal resistance, and this is also the previous support level. So from here we can see eventually the market will take some time to violate, to break above this structure, or to reject this structure immediately. So or the market starts to fall from there, or it will take some time to break. But what I mean is eventually we will have a few candles trading sideways eventually, and then a break above this structure. Minimum expectations for the pattern at 38% retracements for the BAT pattern. Euro versus cable. CAD versus yen. CAD versus yen, I also need to update some of those levels. And let me try to show you a daily chart before going into that lower time frame, weekly time frame. Let's see what I have here. So channel, ascending channel, we are now trading below this previous structure support trend line. Just to give you an idea, a retest of that trend line and rejecting to recover above that trend line will obviously force the price to keep trading even lower. Three-wave structure. Eventually the market has already finished the correction, as it seems, and this is actually a lower time frame chart. Not so usual, but here it is. I published that chart before breaking this structure, so I published that chart here. And well, as you can see, the market has fallen from there. But I was trying to understand what the price was trying to do from here. So we have also this bearish BAT pattern at 88% retracement. It's a default BAT. Always respect the previous structure highs. It's important to respect the price structure. Bearish BAT pattern default targets between the 38% retracement and the previous structure resistance level. It will turn it into a support level, and as we can see, if we press play, then the market has decided to violate all this structure. Targets achieved, the second target for the pattern at golden ratio here, rejected 1, 2, 3 times, a third time rejecting the golden ratio, so, and the market is now trading above this previous structure. No? At this point we have also, and because we are checking this lower time frame, this minor or lower time frame event, let's see if we have here something, the 78% retracement. Do we have, this is the 127 extension, because if that is the 127 extension, now it seems, this is the Gartley pattern. So the market has produced also now, exactly now, a Gartley, the Gartley pattern. 127 extension, default expectations. Let me delete all these things from here. So this, we already know the market has achieved the targets for the bearish BAT pattern above. We have now this Gartley pattern printed at 127 extension, and at this point we have default targets. We have default targets for the Gartley at or between the 38% retracement, minimum expectation, and the golden ratio at 618 retracement. So as we can see here, the market has nailed the 78% retracement at confluence with the Fibonacci that I showed you before, the 127 extension from this swing low to this most recent resistance projected above. As you can see, let's send those values to the right side. So 127 extension, perfect confluence with the 78% retracement. This is the Gartley pattern at this moment. So we never know if those patterns will work or not. What we know is where the pattern will invalidate, and as we can imagine, trading below, trading above the most recent highs will invalidate this Gartley pattern. Trading these field levels will achieve, will reach targets. Okay, so those are the levels for targets, and this is the level that we need to respect to position our stops. So do not be surprised to see the price retesting those highs and eventually breaking those highs before trading lower, if that is the objective. We never know. Okay, but the pattern is printed, nailed the Fibonacci ratios between the highs, the bottoms, the retracement, the retest of the bottom, and then the 78% retracement and the 127 at confluence, and the Gartley pattern is printed. This can be also considered as a BAT pattern, very similar to the one above, but it needs to trade at 88% retracement. So the Gartley, actually let me measure this retracement, because this is important, because that will distinguish between the Gartley and the BAT pattern. Let me just check before assuming this is the golden ratio retracement there. It seems like a golden ratio retracement, but we never know. Yes, it is. Actually, it is. Actually, the market has nailed the golden ratio there. So bearish momentum, retracement to the golden ratio, retest the lows without breaking the lower lows, and now the 127 extension. So this is some of the criteria for the perfect Gartley pattern. And as I said before, and many other times, even with the most perfect pattern, even the most perfect pattern will fail you. So just don't assume the pattern will work. I prefer to assume my risk for that trade, that assuming that the pattern will work. I prefer to get focus on how much I want to lose or how much I'm allowed to lose in that specific trade in a 2-hour time frame chart. What is the position size for your trade, and where you set your stop. So you already know your targets. You don't want to lose more than what you expect to win. Your default targets are positioned 20 points below your entry. So this is a maximum. Your maximum risk for that trade is 21 points above. Okay, 21 points above. Respecting the structure, if the market decides to trade higher, you say goodbye and search for another one. CAD versus yen. Let's move to another one. And please don't consider those levels, because those support levels needs to be updated, and they are not updated at this point. More. New Zealand versus yen. Another very interesting price behavior from here. As you can see, we have a few patterns here. So I was expecting the formation of this shark pattern to provide to offer me a bullish momentum. I was expecting somehow the market to bounce, but I always expect the formation of something. To trade. So I need a motive to trade the market. I need to wait for that motive to be printed, and I was expecting it at this point. I was expecting the breakout of this support to form this pattern, but well, the market has failed. It's not relevant anymore. So then later the market has started to trade above, printed this shark pattern at 161 extension. It has provided some interesting behavior, giving sequence to the 5-0 pattern. Okay, we have the 5-0 pattern printed here, the 50% retracement, I assume, or something between the 50% and the 38% retracement as a minimum expectation. So minimum expectation, 38% retracement, default target a few points below the 50% retracement. Okay, the market has failed at expectation, but the behavior is here, and the pattern is kind printed here. So we have kind of a bullish 5-0 pattern as sequence from the previous shark pattern. Shark pattern, bearish shark will produce a bullish 5-0, new highs above 224 extension, another shark pattern, Fibonacci ratio, and this one is now trading. It was trading very close to the default, or not the default, but the minimum expectation for the pattern. If you need, there's always the default level for the pattern. There's always a price. There's always a Fibonacci level where usually the price will try to search for, and that is the 50% retracement when we talk about the shark pattern. But if we need a minimum, I will use the 38% retracement. Okay, the minimum, and the one that I use to start to partitioning my trade, to start to break even my position, to start the position management strategy. So, and let me delete this structure, because the price is already changing and changed the structure from there. So we have now this structure, which I believe will break below. Okay, I need this pattern trading lower, and as always, by default 38% retracement, but default target position at 50% retracement. Attention to this golden ratio which is positioned exactly at this previous support level. So for our support, golden ratio, 200 moving average, and previous lows, previous fractal below. So failing from below this structure support trend line, I will not say the market will trade there, but there's a huge probability if the market breaks these levels to search for the 200 moving average again as support level eventually, and well, and a bounce from those levels will also not be surprising at all. Well, from now that's what we have for New Zealand versus yen. More Aussie versus yen. What we have here. What we have here. Okay. Another shark pattern. This descending channel broken, retested here. The market has violated this descending channel. This channel, it's kind of a parallel channel, violated above, broken, resistance above. At that time, the 4 hours resistance was printed there. Bottom, retesting the channel and retesting the 200, catching the 200 moving average, and it's now trading higher. So at this point, I have two options here. One of them, the BAT pattern, the default BAT pattern at 88% retracement, it's printed now. And the market needs, if the market needs to respect that level, we will see a 38% retracement from those levels. Let me try to show you this in the color mode. .88% retracement is the completion point. As always, respect the price structure, the previous structure highs and lows when you search for entry levels. Visual, bring to front. 88% retracement. So if the BAT pattern fails at 88% retracement, we have always the 113 extension from the most recent support to the previous, in the starting point of the pattern at 113 extension. So we have the alt BAT pattern at, let's use the pink, we have the 113 extension above all this structure. It will keep respecting those highs. Okay. That said, the 113 extension, but also the 16018 extension, because if the BAT pattern, and there is a quote, and for those who are familiar with that, I believe there are guys and ladies familiarized with this expression. If the BAT pattern fails you, just grab it. So a grab at 16018 extension will not be surprising. But what we have now is the BAT pattern. So BAT pattern, default BAT at 88% retracement. Note this is a 2 hour time frame. We keep it on a lower time frame on those yen pairs. Then we have the 113 extension a few points above as a natural and eventual alt BAT pattern reversal fib. We have also this level. We have also the 16018 extension, considering a major structure, the 161 and the 224 extensions, two levels to search for price reactions there. So we need to price conditions there. So as soon as the market, if the market starts to print us some or offer us some conditions pointing down, it can give sequence to this shark pattern at 16018 extension from there, but we need to observe the market conditions once there. It's the same for every pattern that we find. So at this point, what we have the BAT pattern printed at 88% retracement. This is previous structure resistance level. there's no bearish divergence. We are approaching overbought conditions, at least for me, extremely overbought conditions. We are already overbought, which may produce some relief from here. What I mean is a minimum expectation for this pattern specifically is a 38% retracement that will put the price where there, retesting that most recent support, the previous 4-hour support level. It was this candle here. It was formed last 28 January, last week, and well, that said, a sink or a fall retesting that previous structure support will not be surprising on Aussie versus Yen. The same way I have patterns above, and breaking those levels will eventually breaking or retesting those levels, because the sharp pattern at 16018 extension will retest the previous daily resistance. It's now the weekly resistance also. That said, retesting those levels, it's also a possibility. More Goopy, what we have on Goopy, where I have that chart here. Okay. Pound versus yen. Nothing specifically. I'm just following these the potential breakout of this structure. I was expecting the 142 to be reached at this point. The market is not printing anything from now. I need to go into an higher time frame. Let me just check if we have a Gartley pattern here also. If there's a 127 extension here. Well, we are trading in that zone between the 127 141, which may force the price to bounce, to search for the 38% retracement. Actually, the market has already bounced a few points from there, almost reaching the default target. So even if this is the Gartley pattern, it's already gone. So from here, the market has already approached the targets. This is the previous structure support line or support trend line for the channel, for the ascending channel. We are retesting that level. So for those who are trading breakout structures, this is eventually, in my point of view, this should be your entry level. So the market is retesting that level, and there's two options to engage a breakout, a structure breakout. One of them is to wait for a violation of the most recent lows. So I assume the market will enter into a sideways process, retesting this trend line, support line from the previous structure, and then a violation of these levels, a violation of the daily resistance below. So this is Goopy, which I expect to see a retest of this previous resistance, which is now potential support level. Euro versus yen. Euro versus yen, I believe this is 1 hour time frame. Surprising. But yes, it is. Eventual heads and shoulders is what I see immediately when I look into this piece of data here. I see here the right shoulder, the head, and the eventual right shoulder, left head and right shoulders. There's also a possibility to retest. Note that this sharp pattern has already provided some interesting price behavior, retesting these monthly supports. The market has nailed that support level. This is a support printed, I don't know when, but we can go into an higher time frame to try to understand when was printed that so that support, that monthly support. And as you can see, it was printed last May 28th or 29th from last year. So it's a level, it's a strong support level, and the price has decided to respect that level even on a lower time frame, as I was showing you here. So eventual heads and shoulders, but I admit the formation, and this is what I expect. So at least for now, there's two options. One of them, a violation of this structure, which will eventually force the price to retest that monthly support and eventually to break it. Actually, we can measure the default projection from this high, the head, and to the bottom support level, and project it below the next zone. The default projection from here, if the market decides to break if you want to project from the breakout zone, we can see if the market eventually, let's imagine the price violating this structure in the next hours, session hours, the market will project the price below the monthly support level. So the default projection, but we still need a breakout of the next zone. At this point, we have also this structure being threatened at this point. So at this point, we are breaking above this previous structure, which may reinforce the idea to print that shark pattern above a 224 extension. That said, what we have is something like this. Okay, that should produce a 50% retracement pullback. Okay, let's try to measure if that happens, where the price should target. So let's say we have the 224 extension and the 50% retracement. Note that this 200 moving average pointing, it's pointing up obviously, but it's starting to change. So it's starting to point sideways. That said, so we have options here. One of them is wait for that pattern to complete above and check the market conditions once the price approaches that level. We have also this structure. We can wait for a breakout of that structure to trade lower. Well, and that said, that's what we have from here. We are breaking above this structure, which may also offer the breakout traders an opportunity to go to trade higher with euro versus yen. Then we have also dollar versus yen. It's almost a similar situation. Different patterns, different criterias, but the same, eventually the same momentum. And at this point, I'm sorry, there's nothing very specific here. We can try to identify patterns above based on the Fibonacci ratio that we have. 50% retracement there, retest of the bottom. Well, again, another. It's too soon to predict those patterns. I like to forecast, or I like to project them once the price starts to approach those levels. But again, 88% retracement is the default pattern completion point, and that should trade the 38% retracement again from all that structure, all that bullish momentum, and that we'll put the price, or at least we'll project the price again at those levels. So let's see the completion point, trading at targets, retesting previous structure resistance level. So, okay. But pattern, fall into the minimum expectation, will put the price retesting previous structure and most recent resistance level. A bounce from there, it's a natural process, retest and bounce, or eventually a breakout of those levels. If the price rejects to trade higher, respecting those highs now, we can see, we will see what the market will develop from here, but eventually the market will reinforce that resistance above and later reinforce this support again, which may enter into a process of a corrective structure which will take longer to develop, to form, or to finish, let's say. Dollar versus Mexican peso. What we have here. Oh, this is an higher time frame. I need to go into 4 hours or even a daily time frame to show you what we have here. Come on. So this is a daily time frame, dollar versus Mexican peso. This is the bullish shark pattern at 1618 extension. The market has already, as you can see here, so the entry level, the market has produced some interesting price momentum. This is the daily time frame, so each candle is a daily candle, so it has produced some interesting behavior, but then later it has reinforced these lows. So what we have now is a potential double bottom, a technical double bottom with a neck positioned here, with a neck positioned at 166. So this is my neck zone, the close price of this dodgy candle printed on a daily there. So there's a dodgy candle, the price has printed then this engulfing candle, I believe, and then retesting those close prices, technical double bottom, and the next zone. If that happens, if that ends up being a double bottom, it will act as a potential reversal. So the trend is bearish. A reversal behavior as a double bottom will force the price to trade even higher. That said, we have this bullish shark pattern printed on a daily. Then we have also, let's go into a 4 hours time frame chart. As you can see, we have this channel, this bearish channel also broken, so the market has decided to violate that channel. New support above, new resistance above, daily resistance, and a retest of those lows. Retest of the lows and started to bounce from there. So we have a potential technical double bottom with the neck position at above. And now, if we go into a 2 hours time frame chart, we have also one eventual bearish bat pattern on hold at 88% retracement. So don't ignore that possibility to retest those highs without breaking them and a sink again on dollar versus Mexican peso. But we are now, and this is a 2 hours time frame chart, it was what it was, but we are now facing or threatening as support the 200 moving average. So that can reinforce the idea to trade higher with Mexican peso. Let's see if that will happen. If that will happen, I have default targets for the pattern positioned at 38% retracement from a daily perspective. So this is a 1955 So this is my default target for the bullish bat pattern, the bullish shark pattern printed on a daily on dollar versus Mexican peso. Also, I published that pattern before the completion point. I engaged, and I still positioned inside that trade. Dollar versus NOK, major and eventual heads and shoulders. We have also, I believe there's 4 heads and shoulders, 3 or 4 heads and shoulders on NOK on different time frames. And the one that I want to show you, because it's the one that I was following from the highs. We have these heads and shoulders here. We have the left, the head, and the right shoulder, and the market has violated this structure support, the neck zone, and then it has printed another one. Let me try to change these colors here. Head, left shoulder, head, right shoulder, and left shoulder, head, right shoulder. So we have 1, 2, and actually there are 3 heads and shoulders printed by NOK on different time frames, from 1 hour, 2 hours time frame, 4 hours time frame, and a daily time frame. On a daily time frame, we are now, note that we are now threatening the monthly resistance, so this should act as a support. This is monthly resistance, which may act as a support, and the price is now printing these heads and shoulders formation. So the default target for the default projection, not a target, but the default projection for the pattern positioned below at the bottoms of this shark pattern printed above. So this is the shark pattern printed, the crab pattern printed at 1618 extension, and the default projection for the major heads and shoulders will put the price retesting the lows of that pattern, so the bottoms below. And this is what we have for NOK. Actually, after the previous 2 heads and shoulders working so well, I will not be admired to see this major bearish momentum, or that rally on NOK trading pushing lower. Then we have dollar versus CAD. Come on. Okay. Dollar versus CAD also, I still holding a position from this major. This is a weekly time frame chart event. This is the weekly bearish bat pattern at 88% retracement. So I took a short there with some of my subscribers also took the shorts from there. So I have a short position at a few points above the completion point. So when I checked the market conditions, I entered the market above the completion point as soon as I started to see the price recovering or starting to fall from there. Weekly resistance, we are trading far away from the default target for this major bat pattern. Okay, this is not the default. The default target is positioned here, so we still need to trade a few points below. This is the structure channel, a ascending channel, a parallel channel. The market is forming and respecting this trend line as potential support, with targets positioned at 38% retracement. This is the default target for the major pattern. Obviously, we are trading the 50% retracement for the shark pattern. It has produced a bounce as expected. Okay, 5-0 pattern. 5-0 pattern. It has produced some momentum, bullish momentum, But the default target, as I said before, the default target for the major BAT pattern is positioned here, so at 38% retracement. Actually, that way. This is the default target for the BAT pattern. So that said, obviously breaking above this monthly resistance will reinforce the idea to trade higher with dollar versus yen, which is not what I'm seeing from here. I still believe there's room to retest those lows. We have more dollar versus CHF trading higher as expected. A nice bounce from shark territory. Actually, two sharks ending up working very well. Let me show you those on a 12 hours time frame chart. So, and those were projected and shared among the communities before the completion point. Okay, as soon as I saw a violation of these lows, here, this previous support, I started to project this pattern below. The market has nailed the 160-18 extension there. It has produced some interesting behavior. A minimum of 38% retracement was reached at this time. Then the market has printed this shark pattern again, a 224 extension, and this one has produced all this huge momentum. So at this point we are approaching the most recent resistance levels, obviously, and breaking those levels we have the 160-18 extension again as potential fib reversal extension zone. So this is also at confluence with the 78% retracement above and default targets for this pattern. Again, 50% retracement. That will print the 5-0 pattern, which may produce some bullish momentum again. Okay, always the same. Shark pattern, 161 to 24 extension. This is the 161 extension, the first level. If that happens, it will force the price to print some relief. Minimum default expectation, the 50% retracement. At this point, minimum expectations, this is the default one, the minimum expectation structure, previous structure resistance, it will turn into a support, breaking that level, 38% retracement, minimum expectation. Default target, again, the 50% retracement. 5-0 bullish sequence, okay? Partitioning your position at 38% retracement or at previous structure resistance as support, start to partitioning and break even your trade and close your trade at 50% retracement, or keep partitioning with a dynamic or a trailing stop which will follow the price if the price decides to reject the idea to form the 5-0 pattern. Aussie versus New Zealand, one of those patterns that I decided to trade yesterday. It was a very interesting price behavior. Sometimes we expect the price to reach targets, but sometimes not so fast, and the price it has reacted very fast from here. So the market has rejected this wedge under formation, and it has violated this structure, monthly support position below, violated, also broken, trading above, and almost trading at target. So we just need to wait for a few more hours to reach targets, eventually to reach our default targets. So let's wait and see. So this is also another shark pattern, the 160-18 extension golden ratio. It's extremely important to identify those levels. As I show you already a few charts where the prices decided to recover or bounce from those levels. Okay, Aussie versus New Zealand, New Zealand versus dollar. Another interesting price action on a daily perspective, on a daily time frame. I was and I still expect the formation of this eventual bearish Gartley pattern at 127 extension from this swing, I still expect that the formation or the potential formation, the eventual formation of that pattern, but we're still trading inside these ascending, eventually ascending major parallel channel. We have the price respecting. Actually, for now, it's too soon to predict this channel, but the price has printed supports below. We have a resistance above, so connecting all those dots, we can use this as a potential channel. Obviously, we have this minor ascending structure. Again, support, resistance, it's the same process. We identify this potential structure channel. As we can see here as an example, as a previous example, connecting all those highs and those bottoms and those tops, we created a channel structure, support and resistance level, and once the price decides to violate above or below those levels, tends to print some impulsive momentum. So at this point we have one potential Gartley pattern at 127 extension. This is the level for the completion point. Obviously, from the completion point, we have also the Fibonacci retracement as minimum, with minimum targets positioned at the previous support and resistance levels, the 38 and the golden ratio, the 60-1-8 retracement. Aussie versus dollar, starting to sink from here in a let's say for a day session, for a day trader, they started to see Aussie trading lower for today. Actually, it's trading positive, but it's starting now to reject, to trade above those highs in a 15 minutes time frame chart. At this point, we have, and I still believe, I need to go into an higher time frame, weekly. What we have on our weekly time frame is a potential technical double bottom here. Obviously, the neck position at above. If that happens, the projections above, it's completely nonsense for now. But the projections above the next zone, I will start to search for pressure zones above 1.618 extension. If the market decides to break above these levels. But even though the market can develop into other process, eventually the 2618 setup, other advanced patterns may be printed before reaching those levels. So we are now trading above this trend line resistance. Actually the second bottom was forged retesting that trend line, this previous resistance trend line. It has been respected. Obviously we have this spike down 3 weeks ago or 4 weeks ago, and the market has resumed and recovered the most recent losses at that time immediately. So the market has synced, and the same candle has recovered immediately the most recent losses, and it's now trading, trying to bounce from there on a daily perspective, and that's what I want to get focus on. I need to go into a lower, I need to delete all those things there. On a lower perspective, we have on a lower time frame, we have this shark pattern, actually this cipher pattern. This cipher pattern printed at 78% retracement. The market has decided to sink from there. It has found some support at 200 moving average, and it's now trading the same conditions that I showed you before. Let me delete all these levels because we don't need them for now. So the market has rejected the idea to keep trading lower. It has found some support at this level, and we are now approaching again. Let me delete this fib because I need another one. And we are trading what we consider the default BAT pattern completion point again. So we are now rejecting to trade above the previous structure highs, with some of the criteria for the bearish bat pattern on the table. So 88% retracement. This is the default bat pattern completion point. The targets for the pattern obviously positioned at, as always, between the 38% retracement and the 50% and the 61, the golden ratio, as a second target. Okay, so this is the expectation for the pattern. If that will provide you, or that will offer you 100 or 200 points below, we never know. We trade based on those default targets. So you already know that you engage at the market at 88% retracement, and your trade is 80 points on a 1 hour time frame. So this is your target, the default target. 80 points below, 80 points above, it's what you need to use, or the maximum that you need to use to engage the market in terms of risk. You know, set your stops above, targets below, 1-to-1 risk reward, and you try and attempt. This is a lower time frame event. Okay, but I still believe there's a weekly time frame eventual double bottom, technical double bottom information, and we need to wait for the neck breakout to confirm and to validate that, and that will provide us also some interesting price patterns to project and to wait, and if printed, to engage them. Euro versus dollar, I also have some projections above the 1618 extension, 145.59, 146, let's say. The shark pattern at 1618 extension, the market is now respecting this ascending structure. This is kind of a wedge being formed, and well, I admit the possibility to see euro versus dollar moving choppy, with a choppy behavior inside this channel, inside this structure, in order to trade higher. The same way, as soon as the market violates this structure, retests, and a new low, eventually new lows from there, I will not be surprised. I'm expecting the formation of the 1618 extension, the shark pattern, as a reference, previous structure support, and the next zone from this neck, from this heads and shoulders formation previously printed. So that said, what I expect to see is the formation of the shark at the next zone, previous next zone, shark pattern, and from there I can see euro dollar sinking even more. At this point, obviously the market eventually will not be printed if the market decides to violate this structure and start to trade lower. But at this point, I'm not very interested on euro versus dollar. It's very, very boring process. As you can see here, the market is very choppy behavior, huge periods of consolidation here, and actually it doesn't feel so desirable at this point to trade euro versus dollar. Not at all. And more to finish with cable. This is what I have on a daily time frame. We are now retesting this. Structure support trend line, resistance trend line. It's now a support. It was acting as resistance. The market has decided to break above it. It is now retesting that level. So we have the bat pattern. I still positioned in this trade. I have my stops positioned above these highs. The market has actually threatened my stop losses just by a couple of points, and it has decided to reject my limits here above. And I just, as I mentioned before, I always like to respect the structure. Note that we have previous highs there, and those needs to be respected also. But at that time, at the time that I entered the market, with a 200 moving average there. There's also bearish divergence on a lower time frame. I was trying to take advantage from all those conditions, trend line resistance crossing above. So I decided to enter and to set my stops above these highs, at least respecting these highs, because I know, okay, if the market decides to break these highs, it will break the trend line, it will increase the probability to trade higher. And I don't need to remain a lot of time inside this position. First of all, I have my default targets positioned at a few points below, initially positioned at the previous support level. Let's measure that. Initially, when I entered the market at 88% retracement, my targets were positioned at this point. So obviously the market started to trade above my entry. I need to adjust my targets now. So I have my targets at this point positioned at 170 points or 168 points or 69 points below my entry level. That can happen. The market can bounce from here and search for higher territory, higher level, higher price levels. Who am I to predict that? The pattern is printed and engaged. I just need to wait for the price developments from there. And well, traders, it's all for today. I hope you enjoyed this video as educational content. As we can see, there are some Fibonacci ratios and market conditions and patterns we can try to take advantage from. As you can see, a lot of them has worked very well. Some will fail, some will succeed. We just need to try to understand this is a repeatable process. We need to repeat a process which is profitable, and you just need to prove yourself that it is profitable, and then to start to use as a professional trader, as a retail trader, but trading as a professional, as I like to think that I am. So I'm not a professional trader. I'm not trading for big institutions. I trade as a retail trader, but I like to feel trading as a professional. So I need to it's my profession. It's my duty to work around those advanced pattern formations. So I need to get extremely focused on those process of identifying the pattern, the risk, and the targets. And it's very important, and I will leave you with this last comment. It's very important to enter those trades, and not only harmonic trading or advanced pattern formation. It's very important to take care about the position size of our trades, how much units you want to engage a specific trade setup, and how much you will lose if that trade setup gets invalidated. So I have my bearish pattern printed, I have my levels for targets, I have my stop losses, how much I will lose if the market kicks me out. I need to be here tomorrow to trade. I need to be capable to be here fresh with a new approach for even if I lose this trade on cable, I need to come back tomorrow and face it again. Cable is my friend for tomorrow. If I lose this trade for today, tomorrow is another day. I need to search for market conditions to engage the market. And it's very important to get notions about the position size of our trade. It's very important to know how much I will lose if the pattern decides to work against me. So that said, I leave you today with those comments. Traders, thank you for being here. I hope you enjoy this small approach and those my 2 cents about the market for the next sessions ahead. Educational content only. This is not advice to engage the market. Learn, get familiar, get synced, develop your trading risk strategy to trade your technical approach. That's all for today, people. Thank you very much. Have a nice trading week, and have a nice weekend when it starts to approach. Safe trades to everyone.